Hello friends, welcome to my channel and thanks for watching this video. So we have ended with one more good week in the Wall Street, and this has happened after the Fed minutes and probably, and I've been saying this, market has already factored in about the interest rate moves on the upside. If it has to go down, it would have gone down by now, but these numbers or these minutes just for the sake of sanity check, nothing else, and market has probably done what it has to do. So let's start with this positive note, and let us first see what is happening as far as the overall updates are concerned, and what has happened in this particular week, and what we can probably expect going forward in the upcoming week, as we have or as we are moving towards the last month of calendar year 2022, which means volumes are going to be less, and overall market or some of the market are going in the holiday season, and you will see moves which are not supported by big volumes. So let us see what's going to happen. But before that, if you haven't yet subscribed my channel yet, just hit on the subscription button. Also hit on the notification bell along with the all button to get my updated video notification. First of all, the Black Friday sale. As you can see, online sale to hit a new record, expected to top $9 billion, which means even with this surprising or huge rate hike that the Fed has done, I mean, this is an indication that the economy is still strong and spending power is still available, and this is a good sign. Okay, based on number, on the face value, this is a good sign. There will be lots of pros and cons, or lots of other indicators are also there, but that's something is different. But on the face value of this headline, yes, it indeed looks positive. Apart from that, just looking at the headline, this November job report and Fed matter the most to the market in the weeks ahead. Now going forward, let us see what else is happening, which really matters a lot for the stock market, because there are lots of things which is happening. Tech reality check, we will discuss about that. Valuations overstretched, and big correction has already been done in Nasdaq and IT and tech industry. Apart from that, Binance, other crypto firms lines up bids for bankrupt Voyager Digital after FTX collapse. So this is a developing story. This is really a developing story, and we need to wait. We don't know. It's not about putting your money in any cryptocurrency, but understanding the business model is a tough task, and maybe it will take next 3 years, 5 years, who knows, so that sanity will prevail in the market, and a layman can understand what to look at. Okay, because this is by far way out of the reach. That's something which we need to understand. UA delays talk on Russian oil price cap until next week, diplomat says. Now this is another geopolitical thing, okay, which may have an impact in the market. And recession in 2023 will be an inch deep but a mile wide. That's not priced into stock, says strategist. Now I don't give any credence to this kind of, this may be good for the sake of knowledge, but when you are linking recession with stocks, I would say it is a waste of time, because stock market and economy does not go hand in hand. When you are talking about stock market always feed onto the bad news, and any bull market does not come when everything is hunky-dory. Any bull market will only start when everything goes wrong and your economy is in recession. So try and connect 100% direct correlation with stock market and recession or the economy is not at all right. So everybody has their own view. If you have any view on this, please let me know in the comment section. I would love to read that, and it will definitely increase my knowledge as well. Apart from that, uh, US shoppers alone in boosting Black Friday spend as cost of living crisis hit Europe. Obviously, this is a known fact for the last couple of months. This is not a month story. Apart from that, treasury yields are slightly lower as market assess a Fed rate policy outlook. See, it's not like Fed does not say that we are not going to hike interest rate further. What did they said is, I mean, previously in previous occasions we have increased the interest rate by 75 bips. Now we are going to probably increase it by 50 or 25 bips. So it does not matter, it does not mean, beg your pardon, does not mean that they are not going to increase the rate. Obviously, in absolute term, you will see an increase. So does it mean, what does the market factor in? Now at on one side you can see that the interest rate are going up, and another side you have seen that treasury yields are going down. Okay, and in between there are lots of positions taken by the traders. Long dollar, long yields is a kind of trade which has been played out in this particular year, in this calendar year of 2022. Now this has become the plain vanilla trade. Whether this will work out or not going forward is indeed a big question. So that's why I have said, don't try to correlate or directly relate your economy with recession, with other things, and more specifically with the stock market, because you don't know what stock market is trying to factor in. You just go with the price or go with the flow. Anyways, I think this is most of it. So let's start analyzing what's happening in the market and what we are going to look at as far as the previous close is concerned, and from there we will get the information about what's going to expect in this upcoming week, a tepid week I would say. So Dow Jones closed above 34,347 or at 34,347, so 152 point up. And then we have SPX which is completely flat, and we have Nasdaq which is 0.5% down. Obviously it is high beta index, so there is nothing much that has happened, because we have Thanksgiving holiday, then we have a tepid half day trading session. So there is nothing that has happened. I've been saying one thing, that in the last couple of weeks, that the VIX has been trading in between 22 and 25, and I've been saying that once it comes down to 20 or below, you will see a much more stable market going forward. And now finally it has closed at 20.5. This is a very good sign. Once it started trading below 20, you will see much more stability and uptrend going forward. And you can clearly see a big crash in oil. Oil last week, I specifically remember, it was trading well above $80 or $85. Now it is $76. So there is a huge crash that has happened, and gold is now 1755. I have talked about this, and I'm keep on saying 1680 is the level. And you can clearly see, if you have, or 1640, it went down to 1600, 1640. So from there a $100 move has already been happened. So this is a good swing that has happened. We are going to discuss all about that. Apart from that, now you can see one thing that is very clear. You have, and I've been saying this as well, recession is bound to come. There is no other way, there is no other option. when you go for a multiple choice question and you have option number A, option number B, C, D, you don't have any option. And the simple way to analyze it, your short term volatility, your short term yield is way higher than the long term yield. The 3 month is 4.29 and the 30-year is 3.75, which simply means the uncertainty in the shorter term is way higher than the uncertainty in the longer term, and it simply indicates recession. And I have been saying this one thing, that in previous instances, whenever this thing has happened, it has happened twice in the last 20-25 years. First in year 2000 and then in year 2007 2008, when we have huge crash in the market. Stock market went down by 50 and 60%, but that was the time. We are talking about the stock market fall before QE, before engagement of when the Fed was not engaging very actively in the stock market or save the companies. But after 2008, everything has changed. So don't try and correlate the same events in the past. But one thing is very sure, that economic pressure, economic pain will be there, and you will see US economy, and when US economy goes down, there will be lot of other economies which are directly and indirectly correlated, and where you have population crisis and demographic issues, and you will see countries where business is already down, they will be in severe pain, I mean economically, but not in terms of stock market. I am very clear on that. Apart from that, the dollar index is at 106, so there is nothing much changed. If you are looking at the 1 week data, it went up to from 105 to 108, then it went down again to 105 and closed near 106. So there is nothing that has changed. Now, so let's start analyzing the trend, but this time we will start analyzing by crude. So I think WTI, WTI will be this is Brent. So WTI crude futures, right? Now you can see, let me zoom this chart a bit, and then you can see what is actually happening over here. And I have said this thing in the past as well. I have literally said this thing in the past as well, and you will see the impact of that going forward. So if you are looking at the price chart of WTI crude futures, a trend breakdown has already been done. Okay, this was the trend breakdown. You can clearly see what has happened, and a breakdown has already happened below $92. Okay, now where does it leads to is the big question that we are going to look at. If you are looking at the weekly indicators, it is already saying a downtick, and if you are looking the big chart is indicating a range bound trend. Okay, this is the range bound trend. So obviously when you have recession, these are the oil prices is not at all governed by supply and demand. It is more like an political kind of thing, and you need not to go, and specifically I don't want to go into all those kind of reasons, and I don't want to talk about that. But overall, if you are looking at the trend or the range since 2008, it is very clear that the crude WTI has been trading in between. As you can see, on the downside you have 43 and 32, and on the upside we have 109 and we have 118. So this is what we are looking at as far as the swing is concerned, and this is what we are going to stick with as far as the trend is concerned. And right now it is WTI crude futures is trading at a very crucial level, because once it started trading below $75, and then you have your next support toward below $75, you will move towards 62, and after 62 the road for 43 and 32 will open up. So this is not at all looking good. And there is one more thing which I want you to know, or which one must look at. So if I draw a line like this, okay, if I draw a line like this and if I adjust it, so this is what I can see. Okay, so it will all depend upon the kind of recession we have and what we are looking at, because if the recession, which if you are thinking that recession will go way long than one can think, then the oil price is on the verge of a crash, that's for sure. But there is no such indication, so I am going to stuck with the big range, and probably the upside is over and downside has already been started. This is one thing. Now the next one is about the gold, which is obviously going to benefit out of it. So this is gold futures, and there is a range, and I keep on talking about this range time and time again. There is nothing new, but you should understand, when you're talking about the safest investment, the volatility is low and you have a well defined range, and range trade is a very simple trade, because we know how things are moving and what's going to happen. The probability of the price move is very high. We can actually sense what's going to happen or what will happen beyond a certain point. So on the downside you have 1680, as I have already told you. On the upside you have now your first target of 1816, then 1830, 83, then we have 1966, we have $2000, and the big target of 2085. So this is the well defined range in which gold future has been trading for the last 2.5 years. Okay, so just have a look at it and you will get to know what's going to happen. Now talking about the mighty dollar index, the almighty dollar index, and I am very sure there are some people who are not at all agree with this fact that big downside has already started, but I am very sure about that, because in the last 2 months, okay, in the last 2 months the dollar index has crashed by nearly 8.6%. So from the highs of 2014, 114 and 115, it went down to 105, 106. Okay, so this is indeed a big crash, and you can clearly see the indicators. The monthly indicators have started changing. So this is a good sign for the equity market. And now if I just look at the trend, okay, this is the trend, and I'm not doing anything specific to show you my skills or analysis. I'm just connecting the lines. Okay, I'm just connecting the dots, nothing else. I'm not doing anything which is extraordinary or phenomenal. I'm just connecting the lines over here, and now you can see what is happening. Okay, this is a very simple range in between which the dollar index has been trading for the last 2008 to 18, 14 or 15 years. So you have to at least give respect to the range. You need not to respect me, or you need not to believe in me, but the price is available in front of you. At least you have to look at it. Okay, so this is the upper end of the range. Now you can see, and you may also say that it went up to 115, 14, 15, it went down, maybe it went up to 118 again. There is a possibility. I'm not going to deny with that, but you just have a look at the big range, and then you decide what you are thinking, or what's your thought over here. Okay, I'm not going to deal with this kind of things that timing is very bad thing. If I can understand or see things clearly, I am going to talk about that, and that's what I'm doing. So this is what we are looking at as far as the dollar index is concerned, and I have a very simple range in front of me, and that's what I'm sharing it with you. So on the upside we have 114 and 119. This is the range on the upside, and on the downside we have a range of a support of 98 and then 93 on the downside. Okay, so this is what we are looking at. This is what I am looking at as far as the dollar index is concerned. Okay, this is what I am looking at as far as dollar index is concerned. Now let's go and check it out, the VIX. As I told you, there are lots of things to cover this week, so I don't want to miss anything. At least for the sake of information, I don't want to miss anything. And you can see the similar kind of indicators have turned negative. And one thing is very clear, it has already closed near 20, but if it falls below 18.5, if the VIX started falling below 18.5, then the way towards or move towards 9 will officially start. So this is the big support, and on the upside this is the basic range. Okay, this is literally the basic range. So on the upside you have 35, on the downside you have 9, and you have one more to look at, and the mid range we have here will be in between, or the mid range that we are talking about is 15. Okay, so below 15 or 16 the road for 9 or 10 will start. So here also this is a good thing for equity market. So what we have seen is crude, the crunching fall of crude is good. The dollar index started moving down is good. The VIX is moving down is good, and everything will accumulate into a big good result, and which you can only see in stock market, in equity market. So before analyzing Dow Jones and Nasdaq, just check it out, the US 10-year yield, and I can't say that this is a correction, but yes, if you are looking at the weekly chart, not in monthly chart but in weekly chart, a big exhaustion is available. So the support that you can see over here, this is the 10-year yield. So the big support we have here is 2.73. so that's what I'm working with. But it is very clear from the yield. I'll also show you the chart of yield curve, but I have already discussed that the 3-year yield is more than the 30-year yield, 3-month yield is more than the 30-year yield, so it's a clear indication of recession. So this is the US 10-year yield, and the support that we are looking at is going to be 2.73. Let me show you the beg your pardon, let me show you the yes, this is the chart, and this is the dynamic yield curve, and now you can see a clear inverted here it has already been written, it is an inverted yield curve. You can clearly see this yield curve. An inverted yield curve always turns into a recession or economic slowdown. Whether it will be big, slow, neutral, that's a different thing. Let the economist decide, or let those who want to discuss on that, they will go and start discussing that. It's none of my concern, but one thing is clear: economic slowdown or recession. Okay, now let's go to the important thing, and that's about and those I've been saying this and I will say it again. If you are a bear in this market, be very much aware, you are going to crush yourself. If you are shorting this market, If you don't want to go long, that's up to you, but don't try to go and short this market. You will literally be crushed, because there is no such indication which support the fact that market will go down. Okay, I'm not talking about short term corrections. What we have seen in the last 1.5 year, that's a big downturn, and after 2 years of downfall, I think this is enough, and now the indicators are also saying so. So for Nasdaq, we have our immediate support of 11,000 and your stop loss of 10,627, and what we are looking at going forward will be 12,300 and 13,150, 160 on the upside. So this is the case for the next week that we are looking at. Let us see what lies ahead. So 11,000 matters a lot. The next will be the most stable one, or the SPX. And looking at the SPX is on its way to make a new move. So for SPX or S&P 500, here we are. Just make sure that S&P 500 does not fall below 3,923. Okay, this is going to be your support and stop loss. And on the upside, we have two specific target, 4,176 and we have 4,339. This is what we are going to look at for S&P 500. Now talking about the Dow Jones, this is not at all and this is completely stable. It does not have any impact. As you can see, a breakout, literally this is a big breakout, big range breakout that has happened, and after 5 or 6 months, you have some huge swings. You literally have some huge swings in the market, where the market is threatening to make a big swing on the downside, but what we have seen is something different. So as far as the market is concerned, we have a breakout, and it has happened. Let me adjust the levels. So breakout has happened above 34,290. Okay, so consider this level as your support and stop loss. And for Dow Jones, we have 35,400, we have 35,800, we have 36,586, and the big target, or the previous high that we are looking at, and that will be near 37,000. So this is what we have, and I have tried to explain as much as possible in a very short amount of time. One thing as a summary, I will tell you again, you do whatever you want to do, but there is no such indication in the market which will suggest you to short it or to go negative in the market. You just be neutral or buy. Okay, even if the stock market is falling down, there is no such indications. So be bullish, be brave. Don't try to mix your recession or economic slowdown with the stock market move. Otherwise, you will be, it simply means you are try to swim the river, or you are try to swim on the opposite side of the current, and you will get drowned. So this is the end of the video. Thanks for watching.